The massive blast in Beirut on Tuesday has dealt a major blow to the already battered economy of the country. The blast in the port city of Beirut will cause a $15 billion loss to the once thriving trading country. However, out of the total losses worth only up to $3 billion are insured, which is around just 20%. One of the biggest economies in the Gulf, Lebanon, was already sinking before the explosion that knocked out its main port. Economists say Tuesday's blast, which also damaged large parts of commercial Beirut, could lead to a GDP contraction of around 20 to 25% this year, which is double the 12% decline estimated by the International Monetary Fund. A financial crisis had already led Lebanon to enter negotiations with the IMF in the month of May this year after it defaulted on its foreign currency debt. The blast has put renewed pressure on the Lebanese pound, which was trading at around 8,300 per dollar in the black market after the explosion, against the level of 8,000 earlier. Lebanon's financial crisis came to a head last October as capital inflows slowed down and protests erupted over corruption and bad governance. Economists predict more erosion in the purchasing power of the pound, which has lost nearly 80% of its value since the month of October last year, with inflation topping 56%. Any loss to Lebanon's economy has also put a question mark on the economy of the overall Gulf region that is facing the dual challenge of COVID-19-led demand contraction and crashing oil prices. The countries from the Gulf Cooperation Council, popularly known as the GCC, will see their economies shrink by over 7.5% this year. The IMF has revised downwards its April forecasts of nearly 3% contraction for oil-dependent economies. According to IMF estimates, Saudi Arabia's economy, the largest in the Arab world, faces a 6.8% contraction this year, sharper than the 2.3% the Washington-based lender had forecast in April. Overall, these GCC economies will contract by 7.6% this year, and the contraction will be across all sectors, oil and non-oil. Bahrain, one of the smallest Gulf producers, expects its economy to shrink in line with IMF forecasts. The IMF in April had projected Bahrain's economy to contract by 3.6% this year. Another big Gulf economy, Dubai's, has also shrunk by 3.5% in the first quarter. Dubai, which is the Middle East's business and tourism hub, is feeling the impact of the COVID-19 crisis.